Welcome back to Krown's Crypto Cave, wishing you a happy and healthy start to this nice little Sunday morning over here from Helsinki, Finland. And today is a fun day as I want to just be focusing on the long-term price action for Bitcoin here. There's going to be no short-term price action at all. If you want that information, or at least my take on it, I uploaded a video earlier today. And without further ado, this video is going to be focused on the macro cycle, essentially what sort of price targets we could potentially be looking at and perhaps when as well. This is going to be an ongoing series and I will be adding more to it. Just like from last week, this one's going to be evolving, especially as price action evolves. And there is actually several more things that I've found over the past week that do strengthen the case, let's say. I want to get one thing out of the way here first as well. I do not believe that this cycle is ending in December, as many other are saying right now. And I've looked into a lot of those analyses. And while I obviously respect other people, I do not see the same things. And what I'm going to try to do my best here is to support everything with as much data and statistics as possible. And of course, you make the decision for yourself at the end of the day, as you are very likely a well acclimated and knowledgeable human being capable of making your own decisions. Okay, so without further ado, let's get into it right now. And let's build off of last week. So last week we went over this right here on the Bitcoin log curve zones chart. And what do we have going on? Okay, first let's explain it. All Bitcoin macro cycles have essentially, if I put this properly there, have found their macro cycle highs in the red zone throughout the whole history, starting from the genesis in, of course, 2010. And as it is right now, you can see that we have 1, 2, 3 cycles completed, and we are working on our fourth right here, right now. The current top side of that red zone would be at around $140,000 US price per Bitcoin, and that will be naturally rising with each and every passing week as we get more and more pixels on this chart right here. Okay, great. So we're now going to do an analysis of the past cycles to see where we are potentially within our current cycle right here related to the past. And let's just bring up our lovely tools over here. Let me get right there. Bang. There we go. Okay, let's start off with the first one right here. The first one, of course, from 2010 start to ending in June 2011. This was a 322-day cycle going for, on closing basis, 37,750%. And let me also explain this as well, because I did get a few questions about this last time. Krown, why did you not measure from cycle high to cycle high? Very simple, because the cycle begins on a low and ends with a high. Obviously, does not begin with a high and end with a high, of course. And percentage wise, I wanted to do this on a weekly closing basis because that standardizes it. And we just don't know, especially in the past with Bitcoin's, less liquid markets, where these stray wicks are coming in at. So I wanted to identify that as well. Okay, let's move on to the next one here, of which we have this baby right here. Of course, this cycle was the one that began on this local low in November of 2011 and ended, of course, in December 2013. And this one was 742 days long. This was 46,000% from bottom to top. So it's already a greater percentage gain. And if we were to put this into statistical terms, this one was 2.3 times longer, or 130% longer than the prior cycle. So the cycles are getting longer, obviously. I mean, 742 days versus 322. I mean, it's almost, it's basically about 2.3x longer, as we've already done the calculations. And yes, I did round on these, by the way. Anyways, move on to the next one. This one beginning in December 2014, ending in December 2017. And let's put on our, our forecast right here. And what do we have? This one was 1,064 days long. The total cycle from bottom to top was about 9,000%. So significantly less than the prior two, which is what we do expect over time. We do expect that there will be diminishing returns, naturally speaking, as any sort of, asset comes into maturity. It's not going to have the same sort of gains over time. I mean, you can't grow 40,000% every cycle. It's just too much, Anyways, this one was 1.43x longer than the previous cycle, or 43% longer if you want to look at it from that aspect. So already we're seeing that, again, the cycle is longer, definitely, but the rate at which it is getting longer is diminishing, and rather significantly, actually. Okay, so now let's talk about our current cycle right here. The one that essentially began right here on our lows in December of 2018, actually. And right now, I don't believe that we've seen the high. Or I would actually argue that if we I'd actually argue that if what I'm going to talk about for the rest of this video does not come to fruition, we've actually already seen the high right here. Just so you know, I don't think that that's what's happening, but that would be my interpretation. Anyways, this one, if I can get it out, has been thus far, and this is actually going to be 7 days longer than that. So let me adjust this, and we'll adjust this continually as time goes on. 82. Or sorry, plus 7 is, Jesus Christ, Haiti, my apologies. Bad, but 1080 days, okay? So we're very comparable with the prior cycle, about the same length right now, just 2 weeks longer, essentially. And thus far, from bottom to top, it has been a 1,900% gainer. And again, this is still consistent from our last interpretation, or maybe a little bit more than that, but still, like around 2,000% essentially. My point is, and it's been about 20% long. Well, we don't know how long it's going to be because we don't know the end, obviously. But if I were to make an extrapolation between the past few cycles, you know, we can see that from the second cycle to third cycle, it did get 43% longer, yes. And the one prior to that was 130%. So maybe it's going by a factor of like a half every time. So I just insinuate maybe like 20% this one's going to be longer. And then that's kind of like my minimum. You know, could it be less than that? Could it be like 15%? Perhaps yes. You know, understand what I'm getting these numbers from. And then maybe as much as 40, like if it's going to be the same as the last one, I think that's going to be an outlier, obviously. But that gives us a range as to when to kind of expect an end date. And why is that important? Well, because that's the purpose of this fucking video. That's why. No. What do we have right here? Well, we do see that I can actually just forecast this out. So if it's going to be 20% longer than the previous cycle, which was 1,064 days, that's going to be about a little bit more than 200 days, right? Just doing some bad mental math right there. So 200 days is about a little bit more than, I don't know, a little bit more than 1/2 of a year. Yeah, a little bit more than 1/2 of a year. Just again, doing some bad mental math, but basically I have that out in late May, early June. So that would be a potential end date. And then for the more prolonged estimation of this 40%, which again would pretty much be the same as last cycle's growth. So this is probably not correct, but I think it's important to just do anyways, would imply somewhere around, you know, September, October of this next coming year. And of course, 1,900% from bottom to top thus far is certainly an outlier for the past few cycles. I mean, we're talking about basically 38,000 versus 46,000 versus 9,000. Now, yes, there is a big drop off and we do expect diminishing returns, but 9,000 down to basically 2,000 is quite significant right there. And I think that that's rather unlikely, especially considering that we have not hit the top end of the red zone here, which has always marked the parabolic blow off tops or just the highs of those cycles. Okay. All right, so we've gotten through all of that. Let me just check my notes over here. I want to make sure that everything's operating properly. Okay, and then now I want to throw on some Fibonacci extensions. We're going to start with this first cycle over here. And we just want to see if there's anything, you know, interesting about this. And I'm going to get rid of these texts for right now because they're just going to get in the way. And let's start off with the first one right here. And I've taken it from the macro base. So we're taking an extension from the macro base and looking at the extension as to where this cycle is ending. And you can see right here, this first cycle ends around the 2.618. Between there and the 414 on a closing basis, basically. Okay, interesting, but without context means nothing. So let's do the next one, coming out of this macro base right here. And what do we see? Well, we see the next cycle high between the 2.272 and the 2.414. Okay, some numbers coming up there again. Interesting. Let's take another one for this cycle right here. And what do you know? Our 2018 cycle highs is between, or is basically right at the 2.414. Okay, a lot of uniformity now. And let's take another one for this prior macro base of our current cycle, presumably. And what do you know? We do see that, well, we are nowhere near even the 2-spot extension at this point. And theoretically, based off the past cycles, we've gotten at least to the 2.272 and as far as the 2.618. So you can just kind of cut it to the middle and come up with a bit of a range here. And if we are going to be interpreting these dates, that being basically like late May, early June to as much as basically late September or early October, we can draw out this logarithmic growth curve. And kind of extrapolate where those might be, as this is, you know, somewhat uniform in the way that it's growing over time. Obviously, it is having diminishing returns, yes, but it is still growing. Just the rate at which it's growing is getting lower over time, which is very consistent with our prior analysis of the actual cycle statistics. Okay. Apologies for the lispy, the raspy, lesbian, lispy right there. Apologies on that, but it's the only way that I can speak. Anyways, what do we see right here? Well, the 2-spot 414 is at around 214,000. And please understand that these numbers right here are extremely sensitive to even the smallest change as to where they're anchored. So these aren't going to be like super exact, but around there is kind of where I would postulate these numbers. The 2-spot 272, which we've never seen a cycle end lower than that for what it's worth, would be at those times around 169,000, in fact, which is a great number. And then if we were to get, you know, the moonshot that we potentially could, I mean, which I think is unlikely, but that would be the 2-spot 618, as we have seen the first cycle get up to that level, and that's just above $300,000. Okay, that is all interesting on its own, but let's expand upon this a little bit more. And actually, before we do that, remember, if we go back here to the text, I just want to do this really quickly. So if we go back here to the text for our current cycle, which is right here, right now we've seen about almost 2,000%, right? And the prior cycle to that was about 9,000. The prior to that was like, I don't know, 40 or something. The prior to that was like 40 again, around there, basically. You know, at those numbers, it's like, might as well be the same in my opinion. Anyways, let's just see what sort of percentage gain would we be looking at from our current cycle lows to that presumed cycle top, and see if that would be relevant. Well, if we were to top out at about 169,000, sometime around May, June, that would be 5,300%. Okay, interesting. That's a lot more in line with what we have seen in the past. Yes, they are diminishing over time, but that's a lot more comparable to what we've seen in the past, in my opinion. And then if we were to go all the way up to the other one, again, like, you know, even the smallest changes account for like major percentage changes there, that'd be about 6,200%, which is very, very comparable to the prior one. So it's still diminishing, you know, lost about 30% right there. But it is still, well, good. And I mean, let's see, hold on, 38,000% versus 9,000%. Yeah, I mean, you know, it's comparable in my opinion. Not exact, but comparable about. Anyways, okay, let's move on to the next one. All right, okay, we got that. Let's move on to some Bollinger Bands over here. Okay, so we're on a bi-monthly right now. I think that this is important to always reflect upon, in the sense that Bitcoin on the bi-monthly is not just closing above the topside Bollinger Band right here, which is a volatility-based indicator, but it also closed on new all-time highs coming into this month. So this is a fresh one, essentially. And why is this important? Well, if you close on new all-time highs, and we just had a higher low right here, then it must be continuation by definition. And when we're looking at a bi-month, we don't expect this to happen like now, obviously. This can happen within the next 2 to 4 months, I'd say minimum, and as much as 6 months. And in this case right now, we're just in the first month. You know, it's not really relevant, even though things are still looking rather uniform here. And basically, anytime we've been in an uptrend on this, or a continuation trend on this, it's been good. Closed on new highs, typically a good sign, right? Until it's not. But more importantly, as long as we are freshly closing above the topside Bollinger Band on the bi-monthly, I look at this as active and likely to continue, more importantly. And in this case, we're still getting that. We just got a fresh closure above there. Let's look at the quarterly, which is closing not at the end of this month, but at the end of December, at the end of the year, essentially. We're gonna have a chance to do the same thing over here, as long as Bitcoin closed above $52,000. Very interesting number right there, because if you did pay attention to my video earlier today, I do think that's, I think Bitcoin could go a little bit lower than that if things get really nasty. Not necessarily has to do it, but that would still be kind of like a bottoming area if things got nasty. Not saying that they're destined to, but definitely possible right there. Anyways, the quarterly is going to have a chance to do the same thing as well, not just closing above the topside Bollinger Band, but also potentially closing on new highs. Again, we still have another month and 11 days to go. A lot of things can happen, but it's within striking distance. I mean, it's current. Our last monthly closing high was 58,800. We are currently trading about $150 below that right now. A lot can happen in the next month, but it is relevant for right now is my main point right here. Let's also go look at this. So very few people look at this because, I mean, it doesn't update all that often, but the biannual closure, that's going to be coming up the same time as a quarterly at the end of the year. And is this bearish or bullish here? This is obviously fucking bullish, and this represents 6 months of price action. So I would be expecting at the very minimum another 6 months after the end of this year for this one to have another try higher. And I mean, not really closing above the top side Toronto, but again, just kind of eating up the last shooting star dildo right here, which this was like an obvious buy. We were very adamant about this, by the way, middle of this year. You know, this would imply that we probably have at least another 6 months of looking at this, potentially, you know, another 12 months, which could kind of play into the higher target that I did postulate, maybe topping out like in Q3, Q4 of next year, not this year, next year, not this year. So this would also be rather powerful. And I think that very few people are looking at this chart. And I think that this one, if you just showed it to someone, you didn't put numbers on the side over here because that just makes you googly eyed, or at least it does for myself. I mean, I'm generally going to be looking up. This is obviously good, right? It's obviously good. And then we can just play around with the yearly as well. I'm not sure that we'll see anything here because I haven't tested it, but not really giving me much. But I mean, look, if Bitcoin closes anywhere above like $50,000 by end of year, this is just going to look generally good. Okay, so we've gotten through all of that. I do want to do one last small thing here, and then we'll get into the final point. So, oh yeah, this one as well. This isn't really relevant for the very long term. I was just looking at, you know, typical bottoming dates for Bitcoin, and all of these are kind of around the 20th and 21st for these vertical lines, all of them except for one, which was actually our last major high. Moon phases, obviously we got a bull moon over here, whether you believe in that or not, interesting, but it was apparently like a really big one. But, you know, it does have pretty good results. Obviously, you know, check it out for yourself. And then where was my other chart? I know it's here somewhere. Oh, I guess, oh, here it is. Here's the monthly Stochs. So this just represents monthly momentum, and Bitcoin has monthly upside momentum as long as we're above 40,000, closing in 11 days or so. And not only that, but it's holding in the bullish control zone, which is more important if we look at it from this angle right here, with all these vertical lines representing all of the times that it has officially gotten into the bullish control zone, which you can see on the price action charts. If we, well, you can just see it right there. I mean, I think the results speak for itself, and freshly getting a cross up over here, again, does, at least in my opinion, gear up the probabilities that we very likely have not seen the high for this cycle, especially as long as we're above the 60 read on this. And potentially we're just getting ready for another major run. Okay. All right. All right. Yes. So let's get into this next point over here. We're going to go back to this chart, and we're going to go to another one that I've already set up. Okay. Let's go to this Bitstamp. There we go. Giving away my cards already, but let's get rid of everything and make this nice and simple. Yeah, there we go. Yeah. Okay, and let me get rid of this one. All right, so this is another long-term chart of Bitcoin. It doesn't have as much history as what we looked at on, or actually, do I have it on BLX? Oh shit, it's that chart. Yeah, I can't delete that chart. Okay, so it's the same chart as this, just this one goes a little bit longer, but you already know how that works out. So let's go to Bitstamp. It's just not going to have like 2010 data essentially. But other than that, it has a lot of good history here, which is why I'm using it just to represent this. So all of these vertical lines represent halving dates for Bitcoin, right? And that's what a lot of people believe that the cycle is based off of. And there's certainly a good fundamental reason for that. I'm not saying that that's not true. It's just that's secondary to what we're going to be speaking about here. Or it's not that it's secondary, it's just we need to build upon that, obviously. So you can see that there's a lot of similarities, right? You get your halving date coming out of your macro base. And again, this one, you know, you would have seen like a lot of action going on over here. It topped out like somewhere around 25, 26. So that's why you're going to see the Fibonacci extension on this one a little bit different, just warning you beforehand. Anyways, you get your first major splurt up and then consolidate within the yellow zone. Interesting. And then once you break out above your prior high in that yellow zone, boom, massive move up. Same thing over here, halving, move into the yellow zone, base, and break above the high, major new highs. And then so far we have been obviously operating and consolidating within the yellow zone for a very long time here. And we would extrapolate that if we do see a break of the current high structure, well, we have seen essentially the same thing in the past couple of iterations of this. So let's take it one step further. Let's throw these back on over here. And there we go. Wait, what? Okay. Wait, what? Sorry. Anyway, so now I'm going to take a Fibonacci extension from the macro base, and I just want to see again if there's any similarities here. So, we've already spoken about the highs coming in at the 272 and the 2414. That's not what we're focusing on right now. We're focusing on this mid-cycle consolidation, which is in the yellow zone. And not only is it in the yellow zone, but it's between the 1.272 as the base, and the top is the 1.618. And as soon as you break above there, I mean, this was a rather nice run. In fact, it was to the tune of about 400%, let's say. 400% right there. Okay, interesting. Well, let's go one step further over here. And what do we have? Well, we have a very similar thing now, don't we? If we draw a Fibonacci extension, and we have this mid-cycle sort of consolidation right here. This one's at a little bit of a lower level, to be fair, so should be, very forthright with the, the slight differences. I mean, I don't really consider that a difference, to be fair, but, some people might. Anyways, once it breaks above the 1.618, boom, major move to the upside. How big was this move? Let's see. Oh, what do you know? Almost 400%. That's interesting. All right. And what are we doing right now? Well, let's take another Fibonacci extension from the macro base right here. And, oh, what do you fucking know? The 1.272 getting the lows of that consolidation. Like, this one looks very similar to this one over here, by the way, just, elongated essentially, a little bit less so than this one, but history does not repeat, it rhymes, as they say. We are humans, and our emotions and whatnot are quite consistent over the longitudinal period of time, just represents in slightly different ways. And where's the current top side of our consolidation? Oh, what do you fucking know? Not only at the top side of the yellow zone, but at the 1.618, and breaking above there. Let's see. So what if Bitcoin did play, okay, let me actually get this right. Should be a little bit lower right there. Yeah, and that actually gets the exact low right there. Beautiful. So what if we were to play about 400% from the break of that, or 350%, because it is kind of diminishing a little bit. Hey, stop that. Hold on. Apologies. It's actually, yeah, let's get this. There we go. Okay, beautiful. Well, right now we'd actually just be retesting that region. Okay, 300% puts us at around the 2414, which was actually relevant towards our prior analysis. If we were to go for the 400%, which I think is probably going to be an outlier, that puts you actually, between the 414 and the 618 at about 280. Actually, is that a Plan B target at 287,000-ish sort of target right there? Possible, yes. I think that's a little bit less likely, to be fair, but relevant, at least for this analysis, again, based off the statistics here. So we're 22 minutes into this video now. I think I've spoken about everything that I want to speak about on this particular video. And well, I think that is as it is. Oh, there's one last thing maybe that we could address here. We haven't spoken about this indicator basically at all, but that would be the weekly PMAR, not the PMARP right here. Running, I'll just show you my settings, 35 VWMA. And what are we seeing? Well, long term, we've actually never seen a macro high without at least getting to like the 3.6 region. And even then, like that's been certainly more on the lower side. Now, could we be doing something like this long term, drawing a regression through there? Perhaps yes. But even then, I mean, that would still be rather unlikely that we've actually seen the high right here. And as long as we're above the moving average on this, I mean, Bitcoin's generally been long-term bullish based off that. You can see going back on over here, this was your 2019 run. This was your 2016 to 2018 run. Yes, we did see a few closures below, but never got a negative slope on it really for a prolonged period of time. Same thing over here throughout 2012 and 2013. So this is another thing kind of suggestive that I don't think that we've seen the highs of the cycle just yet. And I do think that this cycle is going to be a lot longer than what many people are considering right now, or at least the general consensus from what I can gather off of social media. So I wanted to add my 2 cents onto this chart. We've added a few things just in general to it. I'll be updating this as I find new things and as the cycle, obviously continues onwards and forwards. What would invalidate all of this and make Krown just a complete fucking moron and completely wrong? Well, going back down below $40,000 would do it for me. There we go. That's what you can potentially look forward to. But until then, when we're talking about the macro, I mean, it's obviously very far away, but this is a macro analysis, obviously. So it's naturally going to be that. I mean, you're talking about potentially what is this, about a 40% move down versus like a 300 to 400% move to the upside. Not a bad setup, to be fair, but hey, at the end of the day, I don't give a fuck about any of this because traders have to trade. And, you know, if you are a long-term hodler, which in some cases I am, I'm certainly not, averse to that. In fact, like that's where my biggest gains have certainly come from. You know, that is why I do have a long-term bullish bias on Bitcoin. But hey, if the invalidation gets hit, then no. I guess I essentially consider this $69,000 high the high, and we have something new going on. And fair enough, that can definitely happen. But the statistics, I think, are against that right now quite significantly. And that is, well, how I base my analysis off of. So I hope this one serves you well. Like I said, we'll update this as time goes on, and I'll see you in the next one. Take care.